All right, give me a quick number one in the chat box if you can see my screen and hear me loud and clearly. Wonderful. G'day, Jose. Faith, good to see you. I recognize a lot of acorns in here. John, how are you doing, mate? Fantastic. Joanne, Derek, good stuff. I see a lot of familiar faces. I never forget a name. Even students from 12 years ago, I see them pop up in a webinar. I'm like, I know exactly who that is. Welcome. Hey everybody, happy Thanksgiving for yesterday and happy Black Friday. We're going to jump straight on into things. We've got a lot of really great stuff to share with you today, and so without further ado, we will begin. We got a quick disclaimer. Of course, ACORN Wealth is an educational company specializing in strategies for publicly traded securities. ACORN is not a financial advisor in any jurisdiction or province. Of course, stock trading and option trading involves risking any of the capital that you invest. And for full disclosure purposes, we will be speaking about trades today in live markets. Again, not a recommendation to buy or sell yourself, but for full disclosure, ACORN Wealth is holding these positions, most of those in our own personal portfolio, the ACORN Trading Fund, and by the directors, contractors, and traders, employees of ACORN Wealth. All right, with that out of the way, let's jump on into things. Am I British? No, I'm Australian. I'm an Australian who lives half of the year in Canada. I'm kind of all over the place. They nicknamed me the traveling trader, but that's why I got into trading, was to travel. So we'll talk about that in a minute. But yeah, look, is anyone brand new to ACORN? Anyone not been to one of our presentations? Couple people, okay. Well, welcome. For those of you that are new, I started ACORN back in November of 2007. I started ACORN because I tried so hard when I first started trading to make money, and I lost a lot of money. I blew up 3 accounts when I first started trading in, back in late 1990s, early 2000. I loved the idea of being able to work from my laptop, work from anywhere. This was back in the days when in school we would be drawing graphs of stocks with 2B pencils on graph paper, and in my economics class in high school, and there was competitions on who would pick the best stocks over the 6-month period and would win prizes, and that got me hooked. So great idea. I was great with a 2B pencil and grid paper, but then when I started putting real money in the market, it was another thing. Greed got to me, fear got to me. I lost about 100 grand by the time I was 20, and that was money I'd taken off credit cards. God knows why the bank gave me a $20,000 credit card when I was 17. But anyway, yeah, credit cards, family money that I borrowed. So it was a rough start, and it was disappointing because I'd spent very good money on education and software and indicators, and I wasn't getting anywhere. So I found it was very hard to find good advice. So after I rounded the corner and actually started making money consistently and did that for a period of time, like quite a long period of time, then I was like, okay, there really needs to be somewhere out there that people can learn this stuff, because it was very difficult for me to find it. And that's why we started ACORN. So we began in 2007, focusing on the patterns that I'd found to be very consistently profitable over those last 7 years. And here we are. But some of our biggest claims to fame, for those of you who've been following us for a while, we've been around for now 14 years ish. We've nailed every market top, and there's very few places that can claim that, and actually have traded them as well. In 2008, we nailed that in mid-May. We called the crash, and it wasn't because we had a crystal ball. It wasn't because we've got some kind of magic pill that allows us to see into the future. It's because we follow the smart. We've got a way of following the smart money, and the same things that we used to anticipate that top in 08 is the same things we've used to get out of the market, get out of the way of trouble, and maybe even short the market in 2015 twice, 2018 twice, and most recently in 2020 we did 48 workshops live to the public from December 16th until the end of January, warning people that a 2008 crash was just about to happen, and why. And so we're going to talk about all of that today, and of course what's going on in the market. And this all comes back to three pillars that really make the foundation of everything that we do. And it starts with patterns. That's where I started when I turned the corner and really got onto the pathway to prosperity, as I used to call it. Patterns was a big game changer, because I used to have, every indicator, you name it. I think I had at 1.15 indicators on my chart. And once I got away from the noise, the one thing that really added to the bottom line the most was understanding the high probability patterns and how to find them. We're going to talk about that. Smart money is the second part. And this is not something I did, I've done this entire time. This is something that evolved over probably the last 10 years, because I was finding that a lot of the stocks that I bought and sold, profitable trades, I'd look back at them 6 months later and see that they'd gone much higher, 500%, 1,000%, and there I was with my 20% gain. And I was thinking, I've left a lot of money on the table here. I've done the work at the beginning to find the trade. Surely I should be, need to be getting a better return for that time I've put in and the work I've put in to find it, if it's going to go that far. So what's the differences between just a 20% winner and a 500% winner, or a 200% winner, or sometimes more? And that's where smart money evolved. That we found that there was these ingredients going on behind the scenes that differentiated the trades that really had some guts compared to the ones that were just short-term technical trades. And so smart money evolved. And then the last thing that we're going to talk about, which I think is just as important, is the execution. How do we execute the strategy? Because to me, the idea of trading, what got me excited about trading 20 years ago was the idea of money working for me. I used to go to school every day reading, maybe some of you did, reading the 4-Hour Work Week and Rich Dad Poor Dad and Cash Quadrants and things like that, and talking about the rat race. And and I thought, look, if there's another way to do it, if there's another way to live life and not be at the beck and call of someone else, or a 9-to-5 or a schedule, great, sign me up. And maybe that's what drew you into trading. But a lot of people turn trading into a job. And they're glued to the screen all day long and spend hours of researching every night. That's not what I want. You can do that. I'm not saying there's anything wrong with that. It's just not for me. For me, I want to be able to put my time into the strategy, so that then the strategy can do that work for me. And Buffett says, if you don't find a way to make money while you sleep, you'll work until you die. And so everything we do and what we're going to talk about today is engineered to be something that works for us, rather than the other way around, rather than exchanging time for money. And that is what trading to me is. And when COVID hit this year, and of course it's been a roller coaster of a year for many people. We were stuck in our backyard in Canada, which isn't so bad. So we thought, look, we'll go rent an RV and we'll travel around the back country of Canada for a couple of months. And we did. This is a photo we took in the Athabasca Glacier. If you've ever been up there, it's beautiful. And but look, to me, this was the greatest experience of wealth. Not about buying Ferraris, not about going in private jets here, there, and everywhere and flash cash. It was about being able to, rent this RV with 2 bedrooms and drive across the country for a month. Wherever we wanted to stop was our home, and all that cost us was $100 a day for the RV, for the fuel, for our hot dogs on the barbecue. And I turned to my girlfriend, and actually one of our staff who came with us for the trip, and I said, you know what? This is what wealth is. If you can make $100 a day, you can live like this, and this is amazing. And so that, to me, again, is what trading is. The problem in getting to this, though, in getting there, is that the system is stacked against you. The system doesn't want you to succeed. The system wants you to be dependent on brokers and mutual funds and the talking heads, so that you always need someone. And whereas that doesn't give you true control. It doesn't give you empowerment. But realize that that's the way the system is structured. It's got a different agenda. It wants to feed off of you. Whereas what we're all about is we want you to be in control. We want you not to need us. We know that we've done a good job training you and helping you if you don't need us anymore. So that's what ACORN's all about, and how we were born. Mick says ACORN is the best service, period. Thank you, Mick. Awesome. Welcome, Juan, by the way. Welcome, Neil. Welcome, Terry. All right. So look, and I'll put it out to the audience here today, just because there are a lot of new faces. What do you think, if you were really to think about it, is there one key thing that holds you back from getting to the next level in your trading? I put some ideas here. Throw your suggestion in the box. What do you think holds you back the most? Is it time? Is it strategy? Is it not having enough money? Is it not having enough discipline? Is it not having confidence? What do you think? Just throw it up in the chat box. What do you think holds you back the most? Fear of gaps overnight against my trades. Okay, gaps, overnight risk. A lot of people saying don't have a strategy. Okay, all right. I'll try to tailor the types of trades and things we talk about today to where the majority of the group is at. So as we continue, feel free to throw your personal feelings up there. Let's just skip ahead a little bit so we can jump into the charts. So I'll turn the webcam off here. Don't worry, I'll come back later, and so we can draw our attention in on the charts that I want to show you. First thing I want to show you is how did we call the 2008 crash, and why is it so relevant to what's happening today? The answer to that comes to patterns. So think about it. JP Morgan estimated at the end of last year that the average amount of trades that happen, roughly 90% of the volume, I should say, 90% of the volume on your average day comes from algorithms. So computers deciding when to buy and sell based on predetermined rules. These rules are patterns. So if 90% of the volume makes decisions based on patterns, then surely we should understand what's going to cause 90% of the volume to go from one direction to the next. That's how we put ourselves on the right side of the market, and that's how we put probability in our favor. It's one big part of it. And so what you can see here is in 2007 to 2009, we had a very powerful pattern, and it's called an inverted fallen angel. And now a fallen angel is a strategy that I love. It's probably where 80% of my long-term money is, and it's at least about 60-70% of my short-term trades are fallen angels as well. And if you want to think about what that is, it's essentially where you get a fallen angel, a bullish fallen angel, is where you have a downward channel, right? Downward channels are bullish. A lot of people think downward channels are bearish. They're not. When you see something going down in a downward channel, this is a very powerful leading indicator that tells you after 3 touches, it's called the rule of 3, this is going up. So when you see a downward channel next, prepare to go long. It's designed to look like it's bearish so that people get stopped out, people see it going down and sell. And who are you selling to? You're selling to the smart money that are preparing for the upward move. So put yourself on the right side of this. When you see a downward channel, go long, especially after 3 touches. Now, a fallen angel is a very special situation. Fallen angel is when you have a downward channel that goes down instead of up. Now, when you get this is once again not a bearish move. This is actually pulling back the elastic band to slingshot even further up than a channel would normally take you. This is the most powerful momentum strategy that exists. And I've spent 20 years studying patterns. This is by far my favorite. We'll talk about some of my other favorites as well, but we want to get this one out of the way first. So That's what a fallen angel looks like. Now, what you can see in the S&P 500 leading up to the '08 crash is the upside down version of that. You had this beautiful upward channel where we broke to the upside and then rolled down. And this is why we were so confidently bearish in 2008. It wasn't because I knew what was going on with the housing crisis. I'm not like I'm not a bright cookie like that bloke on the Big Short. Who's seen The Big Short? Great movie, right? Now they saw it coming. They knew why. I didn't, but I knew that someone knew something, because we could see that the smart money was preparing for a big crash. We found out later why. And by then, when you find out why, it's already too late. Now you're reacting to the market. What we want to do is anticipate. And by following the smart money, we can do that. And this pattern allowed us to do that very well. Now, how is this relevant to today? Well, take a look at the pattern on the S&P 500 going into 2020. We had the same exact pattern. This was how we were able to start anticipating the market was going to crash in the middle of December, instead of reacting to the market crashing as many people did when it was already too late. Right? So we started shorting in December and January. We didn't know why the market would crash. We knew we'd find out later, though, and we did. It turned out to be this horrible thing now known as COVID-19. Patterns are a powerful leading indicator. They are the most powerful leading indicator, and they come with decades of track record, decades of knowing out of millions of times they've happened before the exact same way. What's the win to loss ratio? What's the probability of being successful? How much should we make? How far will it go? All the things that allow us to make decisions with confidence come from patterns. So that's part one, and you can understand now why that's a pillar of everything we do. Next part, smart money. So not only do we have this power of patterns, but what happened as well leading up to the COVID crash, as we have now known it to be called, was that the insiders were selling ahead of it. In the 3 months leading up to the Corona crash, we saw 2.7 billion worth of insiders sell in the services sector, over 4 billion in technology. In fact, over every single sector, we saw this, almost every single sector, we saw this heavy level of selling and almost non-existent buying. What did they know? Is it any surprise that the CEOs of the Fortune 500 companies are privy to a level of insight and knowledge of what's going on well before us? Of course not. That's why they're called the smart money. They don't necessarily have a higher IQ than anyone here in the room, but they have deep pockets and they are connected. And when we start seeing a mass exodus, we listen. Imagine standing in a field. Imagine if you're standing in a grassy field looking at a forest, and all of a sudden, from the forest emerges thousands of animals, all running in one direction. And above the treetops, thousands of birds, all flying in the same direction. And you're watching them all come towards you, and you're thinking, oh my gosh, what's going on? Would you stand there and say, well, I don't know what they're running away from. I'm going to figure out what it is. Or would you turn around and bolt in the opposite direction as well? That's an obvious answer. Why would we do any different in the stock market? If we see that the algorithms are showing us, the patterns are showing us that the big money in the market is flooding out and preparing for a crash or a rally, either way, and we see that the smart money are selling their own stocks as well, not just any stock, but their own companies. Why not listen? So that's what we saw then. And here's the amazing part. Not only did they sell at the top, they bought back at the bottom. The insiders at the bottom of the market, the absolute bottom of the crash, loaded up on their own stocks with their own money, and they did so at record levels. In fact, Wall Street Journal reported on this. It was the same time we were saying the same thing to our students a week before this article came out, that the insiders were loading up in droves. There was only one time in recent history the insiders had even touched their stocks at this level, that had bought at these aggressive quantities, and it was at the bottom of the crash in 2009. So yes, the insiders have got some amazing timing, because they nailed the bottom of the market in 2020, and they nailed the bottom of the market in 2009. Not close to, but at the absolute bottom. Pretty, even someone who's been studying this for 20 years, this still blows me away. And this is why it's a big part of what we do, because we're taking, when we tap into that power of the smart money, we're tapping into the insight and the depth of knowledge they have that we couldn't possibly compete with as an individual. Not even, Buffett himself knows more about a company than the CEO and chief financial officer, right? Everyone is guessing except the insiders. So why not go direct to the source? And that's why it's a huge part of what we do. And of course, we now saw what we then had the largest rally since 1938 after they bought in. So this is something that we feel is very important. And by looking at the pattern, that was what allowed us to nail these kind of key market turns. Now, the next part to this process is we then, to enforce that pattern even further, we then developed an indicator on the S&P 500, which acts as a confirmation. And this indicator is something that is a very big part of every decision we make. This indicator is something that's proprietary to ACORN. We developed it 7 years ago. 3 years of research went into this to bring it to fruition. And when we finally released it and started using it in live market 7 years ago, it blew me away. When we back tested this, 60 years, over 1,500 signals, and the accuracy rate was just under 93%. I don't know of anything out there that's 93% accurate. Not even my wife, right? But I mean, as you know, she's 100% right. But no, look, seriously, this blew me away. When we saw the backtesting data, even I thought, well, that's great, but you can backtest anything. Will it actually work 93% successfully going forward? And we've used it for 7 years now. We've had 24 signals a year over 7 years, whatever the math is on that. 7 times 24. Over the last 168 signals, it's still maintained that 90% plus accuracy. So this is a game changer. If you're a futures trader, you have to have this. I don't trade futures because I'm not interested in following the market that closely during the day, and with the anxiety that comes with that. I'm not a day trader. I don't enjoy that as a full-time thing. So but for swing trading and for short-term or even long-term trades, this is very valuable because it tells us what direction we should be going. Am I scanning for longs or shorts? It nailed the top of the market in 2020 when we had that pattern occurring, the inverted fallen angel, and it's also kept us long almost this entire year. And it's why we're long right now. We had a strong bullish indicator on November 2nd, right before the election. It told us to go long, told us to stay long here on November 20th. And so this is a pretty special part of our analysis. So that also tells us, should we be going long or short? You'll notice one other thing here. If I just go into an hourly chart, okay, I'm just going to go to an hourly chart just to show you one other thing on the S&P 500. So if I show you the pattern on the S&P 500 just before the election, what pattern did we have on the S&P 500 pre-election? We've just spent the last 20 minutes talking about it, a fallen angel. So I was heavily short in the middle of October. We were only shorting. I had a big position in a inverse ETF. We were buying puts left, right, and center. We were heavily short as of this time on. But as soon as we saw this fallen angel on the S&P, and as soon as we saw our S&P indicator go bullish, we sent out two videos, one intraday and one after market close, warning our students that it was time to exit, that we were seeing a very strong bull pattern. And that alone, just seeing that pattern, seeing that indicator, made a huge difference from giving all those profits on those shorts back and missing this amazing rally we've had. That's the difference those rules gave us. And that's what rules do. Rules allow you to execute. And by having rules, and by knowing to a high degree of probability which way we should be going, this allows us to then go and scan for trades going in the right direction, long or short. So let's now turn over to the trades. Let's talk about what a smart money trade looks like. Now we know how to decide which way we're going. Now we need to decide what types of trades we want to find. And the things that we're looking for come back to, again, the three pillars. We're looking for high probability patterns with smart money. So let's jump into that. And we're going and this is about keeping it simple, right? Something doesn't need to be complex to be successful. In fact, it's usually the opposite. The more simple you keep things, the more you're going to enjoy it. The less you're going to have analysis paralysis, the easier it is to execute. All of these things are an upward spiral to consistent profitability. So the first one I want to show you is TCON. Let's start with the pattern. Actually, while I bring that up, let's start with the insider. Sorry, my chart just froze up for a second. I'll let me work on that. So let's start with the insiders. So again, I'm not a fundamentalist, right? I've got no idea about pharmaceuticals. I'm not an expert geologist like my dad. I haven't spent 20 years in a closed-cut mine chipping away at rocks and understand that type of thing. It's all gobbledygook to me. And but even if I was, I'm not an expert in these individual companies. But there are people that have this incredible insight, and it's the insiders. What better fundamental research could you do than tapping into what the CEO knows, or the chief financial officer knows, or the 10% owners, or the chairman of the board? I mean, doesn't what they think of their own company overweight what you think of their company? Surely they have more insight, even if we're comparing them to JP Morgan or Goldman Sachs or any of the talking heads. Which expert are you going to listen to? The insiders or public opinion? I hands down, 10 times out of 10, the insiders for me. And it's not just listening to what they say. In fact, we don't really even care what the insiders have to say. I don't believe half of it anyway. But what I do care about, what gives us the best signal of what they think, is what they're doing with their own money. And people only buy something if they expect to make a lot of it, right? And when insiders are putting in millions of dollars of their own money, like we saw here in TCON, this to me is a very high probability indicator that something good's happening. Not just that, not just that something good's happening, but it's also a great indication that something bad isn't about to happen. Right? It's not just about what the potential it provides. It's also about mitigating the risk of something bad. Because if insiders are putting millions of dollars into their own stock, do you think they're about to announce 1 week later that they're going bankrupt? No. So it serves two purposes: reduces risk of downside and increases the opportunity to upside. Makes sense so far? Give me a 1 in the chat box if you're following along well with everything we're going over to this point. I don't want to leave anyone behind. All right, John, Neil, Byron, Julian, Ron, Cal, Jean, John, Gary, Al, wicked, awesome. I love this stuff. So let's go and have a look at TCON. Let's start with the pattern. So when we saw TCON, so what we do is we scan for these things. We scan for these opportunities, looking for exactly what I'm about to show you. So TCON came up in our scan in August. Where was our alert on this one? It's hiding from me. I don't know why. Oh, there we go. There's a little icon. It's hiding behind the moving average. There was our alert on TCON on the 5th of August. It was around $1.84 at that time. And now, when we look at this chart, does everyone see the downward channel? Can everyone see the downward channel there? Yep, great. So here's a little thing. If you've been trained to use moving averages, to buy when the stock crosses above the moving average or sell when it crosses below the moving average, can everyone notice that the moving averages here just go straight through the middle of the stock? Well, that's not very good, is it? Because if you're using moving averages and MACD and RSI and things like stochastics, guess what? Absolutely useless here. Because this is not a pattern that works with momentum indicators. So if you've been trained to trade using moving averages and things like that, that's fantastic. Sure, they work, but only in the right situations. This is not one of them. So in fact, you're better off taking the moving averages off the chart because they don't matter. They do not work in an oscillating trade like a channel. It's another huge thing that, going back over we worked with 14,000 people over the last 13 years. A lot of people never knew the difference between oscillating and momentum patterns and how moving averages don't work 50% of the time because of what we've just discussed. So when we see that a trade is oscillating, it's very simple. We know it's bullish, so we can pre-program weeks beforehand, if we want, to buy when it crosses through the channel. That's when it's go time. So that's what we alerted back in August, and a month later, the trade would have triggered on the 31st of August. Breaks through at $2. Now, at that point, it created a flag. You can see here, it popped out of the channel and created this little flag. You can see it right there. Now, a flag is the second highest probability pattern out of over 150 that I've studied. So my first favorite is Fallen Angels. The second favorite, very close favorite is flags. Flags are amazing. Very fast moving. So if you're an options trader that likes to buy call options a month out, flags are something you should certainly have in your repertoire, in your toolbox. There was a flag there, so we alerted a new entry point on that day, around $2.40. You can see it right there. There's our alert. $2.43 was the alert to go long, and up it shot, all the way up to $6. Right, so a 200% move. So if you started with $1,000, you end up with $3,000. You start with $10,000, you got $30,000. And then what happened here is it started to get even more exciting. Now, look, watch as I scroll the screen across. Can you see how it's bouncing perfectly well back and forth between those two lines? So once again, no rocket science here, just rules. The pattern is another flag, a really big flag. Okay, give me a 1 in the chat box if this is making sense. Give me a 2 if it's not making sense. Just want to make sure everyone understands this before we go on. Can everyone see that we have a flag? Okay, this is telling you what to do. There is no guesswork here. The rules are very clear what we do when we see a flag. This is a long, all day long. Okay, you do not go short on this pattern. And this is what patterns give us. They give us certainty. It tells us what to do. And yeah, look, let's go. This is what I'm about to show you is the most what I love about trading the most. What I love about trading the most isn't necessarily the money you can make. What I really love about trading is the satisfaction of seeing it work, seeing like piecing the puzzle together and seeing it. You know, it's like when you finish a jigsaw puzzle. When you start putting those pieces together, when you get enough of the picture together, that all of a sudden those random jigsaw pieces all over the table start to fit, and you're like, yes, I'm going to finish this damn thing. Yeah, it's kind of like that with trading. It's a puzzle, and so the puzzle here tells us when we measure that flag that this is where it's going. We measure from the breakout point, the same measurement. This is going up to 970. In fact, we'll go over here onto the right and delete this other line, which I've drawn earlier, so you can just see it. There we go. Watch how high it goes. So there we go, just delete those replicas. There's our line. Duplicate it from the breakout point, and look at where it went to. Look at where the high was, 10, right on the nose. That's not random, and it works so well because this is the rules that 90% of the volume is following. It's the market isn't chaotic, it's rigged, it's organized chaos, and all you need to do is just tap into these rules and focus on the high probability patterns, because again, you don't want to be trading 150 different patterns. Just focus on the top 3, top 5 even. You know, channels, fallen angels, flags. They give you very clear rules of when to get in and when to get out. And when you couple the fact that that was happening at the same time as insiders buying millions of dollars worth at rock bottom prices, $3, $3.28, $4, now you have a perfect storm. Now you have a smart money trade. And as I said, this is not hypothetical. We are in this. This is how we manage our own money. I wouldn't dare teach something to a student that I'm not deploying my own capital in at the same time. We teach what we do, and we trade what we teach. So in TCON, you know, I had 20 grand in that. We bought 20 grand worth at $4.53, right? And you can see, set and forget, right? My stop loss programmed in at $4.23. My target already programmed in at $7.46. Which was the first target. And after I program that in, I don't have to do anything. All I have to do week to week is just update my stop loss to protect the profit as it goes up. The rest is on autopilot. And that removes me from the equation of screwing up the trade. That's the biggest enemy to anyone's trading. It certainly is for me, micromanaging your trades. And I'm going to show you an example of that. Before we do that, there's the alert, the original alert from September 1st, flag, entry signal 240, first target 357, second target $sign, which means momentum. By this time, it was already well above the first target, so you can see our stop loss had been updated to $4.74, locking in the house money. But to the point of set and forget, let me share this text message from one of my students on this trade. He sent this to me last week, I think it was. But good afternoon, John. Lifetime member here, Robert R. I just blanked out his last name. Robert, I'm happy and sad at the same time on TCON. I made $10,000, which is phenomenal. So thank you very much for that one. For that, you are amazing. I did leave $16,000 on the table by selling too early after changing my target this morning to take profit. I couldn't resist taking the $10,000 gain, but when I saw it, if I had only been patient and waited 2 hours, I would have had 26 grand gain when it hit your target. Yes, I know, I went too big into the position to begin with. I'm still very happy, thank you. Great example of how Robert could have made a lot more if he'd just gone for a golf game, or gone for a walk, and not watched and micromanaged and babysat the trade where the pattern had his back. You know what I mean? That's the difference. Now, let me show you some more. TWI is another great trade. And full disclosure, I'm still in this one. But TWI, again, insider buying. Look, 91% from one director who buys $83,000. Now, you might not think that $83,000 is a lot of money, but if that's your opinion, fine. But keep in mind that not everyone's a millionaire. And so when directors are buying 91 grand or 83,000, instead of looking at the dollar value, look at the percentage. He's doubling his position almost. That tells you the conviction. This person's not just buying a few extra shares. He's saying, double down right now, get me more shares. That's a high conviction. So it's a combination of the money they're buying and the conviction level. So we've got high conviction on this investor. You've also then got this other insider buying 3 times for 25, 5, and 5, which is compounding. So that actually adds up anyway for about over $500,000. What did we see? So we got insider buying. And now check out the chart. So I want you to keep in mind this chart, right? Take a shot of what this looks like. And now watch what happens when I change to the other stock we alerted on the same day almost. Bang. If you blinked, you wouldn't know they were different. Can everybody see how they look almost exactly the same? TCON, TWI. Why do they look almost exactly the same? Because we're trading the same strategy. It's the same pattern. It's the same level, kind of levels of insider buying. What we're looking for when we trade is we're not looking to trade lots of different companies. We're actually just trading the same strategy again and again and again. All that changes is the ticker symbol. So it's no surprise they all look the same because we find them from the same scan. We trade them using the same rules, the same risk management. I mean, after almost 14 years of sharing my strategies and teaching people and running ACORN, there's one thing that people seem to want the most. One of the largest pieces of feedback is that people aren't looking, that people don't expect to get rich anymore overnight. We know that doesn't happen. But you can get wealthy. Wealthy meaning that you have the skill set to generate money every day, every week in the market by having a set of rules, a set of strategies. You know, the thing that gets you there, and the thing that people keep telling us is most important to them, is consistency. How many people in the room would say that consistent results is their biggest priority? Put a 1 in the chat box if that's you. Consistency. All right, a lot of 1s. I don't blame you because it's my number 1. You know, it's like, so right now, just to share a personal thing, I'm on a juice cleanse right now. I'm on, I went 4 weeks without food, just drinking green juice, and I got to the end of that 4 weeks the other day, and I had lost 12 pounds, and I felt better than I've ever felt before. And I said to my girlfriend, I said, you know what? I was going to do a 2-month cleanse, but I'm going to start eating food now because I don't need to lose half a pound a day. Now I know that if I drink juices all day and have 1 meal a day, a nice juicy steak or a chicken or salmon, I might only lose half the amount of weight. But now I know that I've got the structure, the formula to success in reaching my health goals. So now I know it's just a matter of time. So if you have certain financial goals and you know you have the rules and the strategy to get you there, whether it's going to be 6 months or a year or 2 years till you reach where you want to be financially, there's something immensely satisfying knowing it's just a matter of time until you get there, right? Knowing that light is at the end of the tunnel, to me, is immensely satisfying. Let me show you another one. ETM. Again, we are in this right now. This is a live trade as well, and this is quite special. I found that the finding this trade was just really exciting. I talk about this with students to be like Charlie and the Chocolate Factory. How many people have seen the movie or read the book Charlie and the Chocolate Factory by Roald Dahl. I mean, I grew up with those as a kid. I loved those Roald Dahl books, and Witches and the Twits and Fantastic Mr. Fox. For those of you that haven't, Charlie and the Chocolate Factory is all about this kid and this special chocolate factory by Willy Wonka. And they send out, I think it's 5 golden tickets. They put 5 golden tickets in chocolate bars all around the world. And they say, right, for the first time in history, whichever children find these 5 golden tickets are going to be able to go into the Willy Wonka chocolate factory. So kids all around the world are buying chocolate bars left, right, and center, trying to find these golden tickets. And this resonated with me. I remember this story. It was one of my favorite books. So one day, Charlie, this poor child, is walking past the chocolate factory, smelling chocolate every day. Finds $1 in the street because his family can't afford chocolate bars. He opens up the chocolate bar, and there's the golden ticket shining out of the wrapper. To me, scanning for these types of smart money trades is like finding the golden ticket. We know exactly what we're looking for, and we're just unwrapping these chocolate bars looking for that gold shining back to us. To me, this was like finding a golden ticket, because when I look at ETM, when this came up in my scan, this was gold. Look back 12 years. 12 years ago, ETM, which is a radio broadcasting and gambling thing, this hit around 50 cents in the crash of 08. Now, at that price, at the absolute lows, the CEO, president, and chairman of the board loaded up. They then loaded up again at $5 here in 2011. Stock went ultimately from 50 cents to $16, which is a 3,000 plus return. And they sold around $15.87, I think it was. The stock never went higher than around $16. So they bought at the absolute bottom. They made a ton of money on those buys, sold at the absolute top. And then the same people are now buying over the last few weeks at the absolute lows again. That just so happened to be at a perfect 12-year double bottom, which means all the algorithms are just ready to buy at these same prices, because this is perfect technicals as well. So, I mean, even if there was no buying, this would still be a trade I would take. It's still that exciting. But the fact that we've got this impeccable track record of the insiders nailing the bottoms and tops, and they're buying again now, well, that's the icing on the cake. Not only do we have those things happening, but let's pay attention to the short-term pattern. What pattern do we have, guys, in the short term? Or let's call it medium term. What other pattern do we have? Other than a perfect double bottom, we also have a what? A downward channel. So long-term pattern, is it bullish? Check. Medium-term pattern, is it bullish? Check. All right. Do we have insiders? Absolutely. Check. Are they credible? Damn right they are. Nailed. They've got perfect timing. Okay, let's go one step further. What about the short-term pattern? Let's go to the daily chart. Okay. Now, when we look at the daily chart, what pattern do we have, guys? What pattern do we have? Fallen angel. Check, check, check. Take the trade. There is no guesswork here. It doesn't matter how you feel about radio. Doesn't matter whether you like Trump or Biden. Doesn't matter whether you're, all of that stuff goes out the window, because what we're seeing here is actionable rules with a very high degree of probability. What else could you possibly ask for in a trade other than having 3 very bullish patterns, knowing that the algorithms are on your side, the insiders are on your side, which means probably the fundamentals are excellent, and something could be coming down the pipeline which could be very positive. So in we are. I mean, this is smart money trading, but more importantly, this is rule-based trading. this allows us to execute, right? And that is what we do with all of our trades. And when we have rules, not only can we get probability on our side, but we can then trade the strategy without pouring our time into it. And this is why set and forget is the third pillar, because now we have rules. We can program it into our brokers to then do the watching of the stock for us, the selling and taking profits for us, the protecting our capital for us, and allow us to go and enjoy our time to do whatever it is, whether it's traveling like I love to do, or whether it's spending more time at home. You know, my dad hates leaving the house. He traveled all his life as a geologist, and he's in his semi-retired days these days. And you know, heaven to him isn't sitting in an RV. Heaven to him is sitting on his deck in Australia and having a hot cup of tea and doing the gardening. Whatever your time means to you is valuable. It's one thing you can't buy more of. And so this is not only what I feel is a high probability and more profitable way to trade, but it's also something that gives you your time. And that's what we provide. What we really provide, you know, is the pathway to being able to focus on less, focus on high probability patterns. Buck asks, what kind of wine do I drink? Chablis or Chardonnay? Chardonnay, mate. Not a lovely California Chard, as buttery and oaky as possible. And I'm sure the wine lovers in the room will be cringing when I say that. But anyway, less is best, guys. This is what trading smart is, and it makes it fun. You know, I love trading because it's fun, and the dollars and cents aside, it's a puzzle you can unlock, and I don't know. Hopefully you can see what I mean. So you know, look, going into our invitation to you today, we've put together a very special program in the interest of Black Friday, which is going to allow you to take advantage of all that we've just talked about. And I'm just going to load that screen up for you. My apologies here. All right. So just quickly, can everyone see the screen? I should have a chart popping up here for you. We've got about 10 minutes left. So if you do have any questions on this, you can pop it in the chat box as we go forward here. Okay. Oops, sorry, my screen is just frozen. I'm just having a small issue here. So, all right, there we go. Should be showing now. Fantastic. Okay, so yeah, so what this is all about, I mean, is our Smart Money Trading program is a 3-month program that we've launched specifically for today. The 3-month program is fantastic. It's going. Remember that November, December, January, February, March. I mean, these are the best months for trading. October is one of my favorite months. November, this winter period is great. So the next 3 months are going to be instrumental. They're going to be a great way for you to enjoy what we do, to follow our trades. Again, this is a Black Friday TradeGiving only offer. You've basically got the opportunity to go along with these alerts for 3 months. The way they work is I send out a video every weekend, which is when I do the majority of my research, and send out our 5 favorite trades. So that's going to be longs or shorts. There's actually a combination of both right now as we start to get into the toppy market. We're actually publishing a couple of shorts, so about 40% shorts, 60% longs right now. Those include the entry, the exit, target 1, target 2, target 3 in some cases, where we'll sell a third of our position as we go up and reach those higher levels. Stop losses, which are all pre-programmed before we even get into the trade, and we update those every single day. We'll after you get that initial video alert, we'll send you a written update every day until the trade's done. So trade shoots up 50% in a day, we're going to update that stop loss, lock it in, keep locking it in to allow that trade to continue to mature. So options, if we're buying call options on the stock, we are going to be talking about what those are. I mean, great example of an options trade that we just published the other day on Best Buy, right? On Best Buy, right? Here they go. Here's the chart. Just, come on, the screen keeps locking up. There we go. Best Buy. Best Buy is in a rising wedge, right? Rising wedge pattern. So we measure the distance of Best Buy from the top to the bottom. We duplicate that beneath where it's breaking out from. You can see, therefore, we got a high probability trade. We're going to drop from $113 down to $96.13. We've got our stop loss at $117.14. We've bought puts on this. We bought the $110 January puts. I bought 7 of them, 15 of them, which cost me $7,000. I put $7,000 in this trade. My risk is 20%. So I bought the puts for $4.70. My stop loss on those puts is $4. So I'm risking less than 20%. My target, if it drops, right, is a $28 drop. So I stand to make roughly $30,000 profit if this hits my target. But I'm only risking 20% of my $7,000, which is $1,400. I got a $1,400 risk, roughly, for a $30,000 potential gain. This, and the probability is I will win, right? This is where we would take a put option. And this is an active alert that as this goes down, we'll lower the stop loss as it goes down. If this starts to drop quickly next week, then we'll be able to lower our stop loss to our entry price. And now we're trading with the house's money. So in these cases, this is where you're going to get options on the alerts. A great example of that. And I'll again, the link is in the chat box. Thank you, Jeanette. acornwealthcorp.com/give. And we want to give. I would love you to be part of this because it's really exciting, if you can tell. And Tuesday, Thursday, we do live classes every Tuesday, Thursday, where we look at live markets. We talk about cryptos, gold, anything you want to talk about and bring to the table. We'll chat about it. And what's great about the Tuesday, Thursday sessions is we find some incredible trades from the audience. TCON that I showed you earlier, I'm quite happy to say I did not find. It was actually one of our students who was going through this course. They'd run the scan, the smart money scan, found the trade and said, Johnny, what do you think of this? And I said, amazing. This is a new alert. So it's a great community feel where everyone's sharing ideas, and why not? It's about sharing resources because we're all here for the same thing, aren't we? We've got a couple, I think we're down to our last 2 minutes. Yep. So other things that are included, our smart money indicators. I showed you our smart money indicator earlier, which is just, it's a must. This will change, this alone, we sell this for $997 alone as part of an indicator package. You're getting this for life included in the $397. This is phenomenal. The S&P indicator, there's actually 2 other indicators just as good as that make up the foundation of how we decide whether we're going long or short. That's included for life. You've got the introduction to patterns, the smart money trading course, where we show you how to draw the trend lines, which are the highest probability patterns to focus on. That's included. Does it work with TOS? Absolutely, absolutely does. In fact, it works on wealth charts, NinjaTrader, TradeStation, Metastock, Incredible Charts, Thinkorswim, TradingView, and TC2000. And if you don't have one of those programs, we'll give you one. We'll set you up with a program that does everything we need it to and is free. So there's no reason you can't do this. The value on this, I hadn't put the numbers together until this morning, and I almost wondered whether we were giving too good of a deal away. But look, it's Thanksgiving week and Black Friday, so here it is. You're getting 91% off what it would cost if you went and bought these things by calling us up on the phone or going through the website or whatever. You've got 3 months of premium alerts, which is normally $591. You got the indicators package, which is those 3 smart money indicators, normally $997. You got the smart money trading course and the smart money scans, how we find these opportunities. That's included for life. That's normally $1997. 3 months access to the live lessons, normally $397. You've got your own personal coach, that's normally $400. Everything, it's $4,382 for only $397. So 91% off, and you can sign up there at acornwealthcorp.com/give. I just looked at the time. We are at the end of the hour. So look, it's been an absolute pleasure. And if I've missed anything, you can always shoot us an email there, and I'll leave that up on the screen. Otherwise, jump on acornwealthcorp.com/give, and we'll have new alerts for you over the weekend. So can't wait to work with you.